So Nikunj, one of the argument in this entire conversation can be that Nalanda always wants to buy at a fair price. They want to buy, they invest only when the valuation is not high. But why not to sell when the valuation is high?
You know, that's a great point. I mean, when you buy a business, you're buying at a fair price. Because when you're buying the business at a fair price, you are, perhaps the most important yardstick is margin of safety. Margin of safety is nothing else but a function that if you get your thesis wrong, how much money can you lose? So that's the reason why all big investors historically, they wait for bad market conditions, or they wait for what we say blood on the street or a macro sell-off when you get great entry points, because your margin of safety is there. Investing is nothing else but it is like buying gold at the price of silver or silver at the price of bronze. In COVID, well, you got gold at the price of bronze. Rarely that happens. That happens once in 10 years. But once you've acquired a good business, when do you sell? And over the years, what I think Pulak has mentioned and what we've seen with his investment style is that he's a big proponent that great businesses can grow, great businesses can surprise you, great businesses will continue to prosper because they have a reason why they are great businesses. And when you are in a growing economy like India, if you are in a great business, and as long as valuations are not very wild, Nalanda as a fund, it likes to ride the momentum. Because in an economy like India, when the economy is expanding, extraordinary things are happening, which means you do not want to limit the upside, because a great businesses can become an extraordinary businesses, and an extraordinary business actually can become like a immortal business. So if you buy a good small cap, if the business is growing, it could become a mid cap, it could become a large cap. Now that's the potential of the business, and the potential of the business is a function of the business you are in and the return ratios you have. So I think one of the most unique things here, which I think our viewers need to understand from Pulak's thought process, is that you do not want to, you want to limit your downside, but you do not want to cap your upside. And that's what I think great investors have done. They are in a hurry to buy when bargains are there, and they buy a lot, but they are no hurry to sell, because if you hold on to something big, special, and a great business, it can really surprise you. A classic example here is, look at profits of Titan, look at profits of Bajaj Finance, look at profits of HDFC Bank. Seldom Mr. Parekh or seldom Mr. Tata would have thought that this really could be the potential of some of these great businesses. I mean, look at the evolution of Titan. From being a watch company to a jewelry company, now it is moving into eyewear and it is moving into perfumes. That's how great businesses they evolve. That's how HDFC Bank is evolved. So you really want to ride the journey of the evolution of this great business. So a lot of times to break it up, Ramesh Damani also taught me the same thing. बोला भाई वो double हो गया तो बेचो मत. Business क्या double हो सकता है, triple हो सकता है, तो better हो.
Absolutely.
If you like this video, then like, share and subscribe to ET Now.